Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we are diving into an 8K filing from Alnylam Pharmaceuticals, Incorporated. Think of it as a pop quiz for the company S finances and operations, and let S see what they've been up to without giving away too many spoilers before we dive in. If you like getting the real story behind the corporate world, hit that subscribe button, and if you want to chat with fellow enthusiasts about these filings and more, join our Discord community. The link is in the description below. It is a great place to share insights and ask questions. So, Alnylam Pharmaceuticals Incorporated is dropping a current report known as an 8K. This is like a special bulletin when something significant happens that the market needs to know about right away. It is not your typical quarterly or annual report, so whatever is in here is likely a surprise or a major update. For those who might not be super familiar, Alnylam is a biotechnology company. They focus on developing new medicines, particularly using a type of technology called RNA interference, or RNAE. It is all about targeting diseases at a genetic level, which is pretty cutting edge stuff. They are traded on the NASDAQ under the ticker symbol ALN. Yay. The date we're looking at for the main event here is the 30th of September 2025. This is a crucial date because it's when they entered into something pretty big. The main news here, the reason for this filing, is that Alnylam has entered into a material definitive agreement. In plain English, this means they inked a really important deal. And what is this big deal? It is a credit agreement. Basically, Alnylam has secured a new line of credit, which is a way for companies to borrow money when they need it. It's like having a flexible loan ready to go. This isn't just any credit line, we're talking about a substantial $500 million revolving line of credit. Think of it as a financial safety net or a way to fuel growth. This type of credit line allows the company to borrow, repay, and then borrow again up to a certain limit. It's designed for flexibility. Within that $500 million, Therese a special piece set aside for letters of credit. These are like guarantees that the bank provides to a third party, assuring them that Alnylam will pay for something. It's often used in business transactions where a company needs to show financial commitment. What's also interesting is that this agreement allows Alnylam to potentially get even more money in the future, beyond the initial $500 million. They can ask for extra credit lines or bigger loans if they need them, as long as they meet certain conditions. This shows they are planning for future growth or potential needs. So what will Alnylam do with this money? The filing says it's for working capital and general corporate purposes. Working capital is the money a company uses for its day-to-day operations, think paying salaries, suppliers, and covering immediate expenses. General corporate purposes is a broad phrase that means they can use it for pretty much anything that supports the business, like research and development, marketing, or even acquisitions. This gives them a lot of flexibility to manage their finances. Now, let's talk about the cost of this money. The interest rates on this credit line are tied to different benchmarks. One is a base rate, which is usually a fairly standard rate. Then there is SOFR, which stands for Secured Overnight Financing Rate. This is a very common benchmark for short-term interest rates these days, so it's good to see they're using a modern standard. They also have options for other currencies. On top of these base rates to raise an applicable margin. This is an extra percentage on top, and it changes based on how much debt the company already has compared to its financial health, which they call the total leverage ratio. It can range from 1.50% to 2.50% per year. The higher their pre-existing debt, the higher this percentage might be, which is a pretty standard way for lenders to manage risk. Even if they don't borrow a cent, they have to pay a fee on the money they could borrow but haven't yet. This is called a commitment fee, and it ranges from 0.20% to 0.35% of their unused credit line. It's like paying a small fee to keep that $500 million available just in case. Again, this fee also varies depending on their debt levels. When a company borrows a large sum, lenders want to be sure they'll get their money back. So this credit agreement isn't just on Alnylam itself, it's also guaranteed by some of their important US subsidiaries. And to make sure the lenders are protected, a lot of the company's assets and their subsidiaries' assets are being used as collateral. This means if Alnylam can't pay back the loan, the lenders can take these assets. It's a strong security measure for the lenders, and it tells us Alnylam is putting up significant assets to back this loan. Like most big loan agreements, this one has rules that Alnylam has to follow. These are called covenants. There are affirmative covenants, things they must do, like provide financial reports. Then there are negative covenants, things they cannot do, like taking on too much more debt without permission. And of course, there are events of default, which are specific situations where if they happen, the loan could be called in early. These are pretty standard for agreements like this, designed to keep the company in good financial shape. Here is where it gets really interesting from a financial health perspective. Alnylam has to meet specific financial targets. They need to keep their total net leverage ratio below 3.75 to 1. This means their total debt after considering some cash and investments shouldn't be more than 3.75 times their earnings. They also need to maintain a consolidated interest coverage ratio of at least 3 to 1. This is crucial. It means their earnings before interest, taxes, depreciation, and amortization, or EBITDA as it is commonly known, must be at least 3 times the amount they pay in interest on their debts. If they can't meet these ratios, it could trigger a problem with the loan. These are important indicators of financial stability. There is a bit of a loophole, or rather a flexibility clause. If Alnylam makes a significant acquisition, a material acquisition, they get a temporary pass on the leverage ratio. They can let their total net leverage ratio go up by an additional 0.5. For 4 quarters. This is smart planning, as acquisitions often involve taking on more debt or temporarily impacting earnings. When does all this money have to be paid back? The final due date, the maturity date, is currently set for the 30th of September 2030. That gives them about 5 years to manage this credit line. However, there is a condition that can shorten that repayment timeline. If they have a significant amount of other debt that has an earlier maturity date and it hits a certain threshold, their loan here could become due much sooner. The only way to avoid this accelerated repayment is if they have a lot of cash readily available, called liquidity, or if their total leverage ratio is very low, at 2 to 1 or less. This is often called a springing maturity, and it's a way for lenders to protect themselves if the company's financial situation deteriorates rapidly, especially due to other debt obligations. The information in the first part of the filing about the credit agreement directly affects this section. Since they took on this credit line, it's a direct financial obligation. This means it is a debt they owe, and it will show up on their balance sheet, affecting their financial statements. And finally, we get to the exhibits. This is where you'd find the actual legal document for the credit agreement itself, if you wanted to read every single word. Exhibit 10.1 is the actual credit agreement, dated the 30th of September 2025. For anyone who really wants to dig into the nitty-gritty of the terms and conditions, this is the document to look at. And Exhibit 104 is the cover page for their interactive data file, which makes it easier for computers to read and analyze the filing. So, what does all this mean for Alnylam Pharmaceuticals Incorporated? This $500 million credit line is a significant move. It signals that the company is either planning for substantial investments in research and development, potential acquisitions, or wants to ensure it has ample funds for its operations as it continues to grow. The flexibility of a revolving credit facility is a major plus for a company in the fast-paced biotech sector, allowing them to respond quickly to opportunities or challenges. The included financial covenants, like the leverage and interest coverage ratios, show that Alnylam is committed to maintaining financial discipline. These are not unusually strict covenants, suggesting that the lenders have a good degree of confidence in the company's current and projected financial health. The provision for a leverage ratio step up after a material acquisition is a strategic allowance, recognizing that growth and expansion often require more financial flexibility in the short term. However, the springing maturity clause is a point to watch. While not an immediate concern, it serves as a strong reminder that the company's overall debt structure and its ability to manage multiple obligations are critical. Any significant increase in other debt could potentially impact the maturity of this credit line, so investors should keep an eye on Alnylam's total debt picture. Overall, this filing paints a picture of a company that is proactively managing its financial resources to support its ambitious growth plans in the complex world of biotechnology. They are securing the necessary capital while aiming to uphold strong financial health. Alright, that's our breakdown of Alnylam Pharmaceuticals' latest 8K filing. What do you think about this new credit line and what it signals for the company? Future, drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button and subscribe for more deep dives into corporate filings. And once again, don't forget to check out the Discord link in the description to join the conversation. Thanks for watching, and we will see you in the next decode.